How are we looking, Tom?
Pete, we're going to take a step back this morning. The futures are pointing to a decline of 0.5%. So you can reasonably look at that in the context of some consolidation, given where the market's come from over the course of the last week or so. But from the lows of last week, it's up by more than 3%. We're starting a new month, of course. So the pulse that we saw in the Northern Hemisphere last night was a downbeat one generally. But importantly, we navigated a very important hurdle when it came to US inflation. So a measure that the US Central Bank looks at really carefully, which is tied to what US workers earned and spent over the course of the last month. The PCE deflator came in line with the market's expectations. Yes, I know it's a title that just has...
PCE deflator.
Yeah, it's a measure of inflation. And, you know, it's with titles like that you wonder why kids are not getting into economics. But nonetheless, that's another subject that'll be addressed in another conversation somewhere else. But the important thing is that this is probably one of the most important pieces of news out in the US this week, and it'll be followed in short order by the US employment report later on tonight, local time. So that will be the crescendo. But having navigated this figure, what we saw was a moderation in long and short-term interest rates in the US. So that's important from the bigger picture, because what we've seen in recent times is interest rates moving higher, independent of what the US Central Bank does. So there is a widespread belief now that the US Fed will leave rates on hold when they next meet. That's important. We've got an RBA decision next week locally as well. That'll be important. They're expected to keep rates on hold at that meeting as well. So stocks have got a bit of clear air. That won't necessarily be reflected today. It'll be a question of what the market can do left to its own devices. But we have seen oil prices firm up a little bit overnight, up by more than 2%. OPEC and allied producers are still making noises about constraining supply that's going over, as you would expect, pushing oil prices higher.
Well, how much further could Qantas shares dive, do you think, Tom?
Well, look, Pete, it's the question to grapple with is, are the best times behind Qantas for the time being. A lot of discussion around the challenges that households are experiencing around cost of living pressures. You've seen this reflected on a whole range of sectors in the market. But, interestingly enough, to that end, consumer-facing stocks have been amongst the most improved over the course of the last couple of months, particularly in the context of the reporting season, because they had been marked down so much. Right, and the worst didn't necessarily emanate. So, it's sometimes a little bit counterintuitive.
Okay, Tom Piotrowski with the latest there. Thanks, Tom.